Welcome to The Explainer. So, let's just jump right into it. We are living through a massive structural shift right now in 2026. The world is rapidly transitioning from the familiar conversational AI we've all gotten so used to, straight into the era of autonomous agentic AI. We're talking about systems that don't just chat with you, but actually do the work for you. It's a total game changer. And today, we're going to break down exactly how this is reshaping everything from your daily desktop tasks to the entire global economy.
Here's the roadmap for today. We're going to cover the agentic AI shift, the 5 levels of adoption, see these agents in action, look at the enterprise SaaS pivot, dive into the global market shockwave, and finally, uncover the hidden cost of agents.
Section 1. The Agentic AI Shift, Moving Beyond Conversation. To really grasp the sheer scale of what's happening, we've got to appreciate how insanely fast our daily software tools have evolved. Just look at the last 3 years. In 2023, we were all manually typing into chat windows, waiting for a text response, and then going off to do the actual work ourselves. Fast forward to 2025 with tools like Claude Code for developers, and now the 2026 launch of Claude Coworker. This brings true autonomy directly to the desktop for everyone. It connects directly to your local files and cloud apps like Google Drive or Slack to completely finish end-to-end tasks rather than just throwing ideas at you.
The magic word here is agency. With agentic AI, you describe the exact outcome you want, and the system figures out the plan, executes it across your files, and actually delivers a finished product. We're talking a fully formatted deck or a financial model that actually ties. You don't have to painstakingly re-explain your brand voice or data schema every single time, because the AI holds onto that context across the entire task, just like a real human coworker would. It's essentially the difference between asking someone for a recipe and having a personal chef just cook the meal for you.
Section 2. The 5 levels of adoption, the maturity ladder. Okay, I know having an AI execute complex workflows autonomously still sounds a bit like sci-fi magic, but let's look at how enterprises are actually adopting this day to day without totally breaking their operations. Everyone basically starts at level 0, which is your standard chat Q&A. But the massive enterprise value unlocks as teams climb this ladder. By level 1, they point the AI at a folder to knock out a single deliverable. By level 2, they turn that into a repeatable skill file. Level 3 is where it gets really fun, scheduling that skill to run entirely on its own, say every Friday morning. And finally, level 4. This is where tribal knowledge gets encoded into shared, admin-provisioned plugins for entire departments. Boom! The baseline productivity for the whole team rises instantly.
Section 3. Agents in Action, Transforming Knowledge Work.
So let's ground this in reality. What does this actually look like in the corporate trenches? Well, in legal, teams are running first-pass NDA red lines and monitoring multi-jurisdiction regulations instantly. In finance, it's not just flagging that revenue dropped 3%, it's actively pulling the root cause commentary to explain exactly why it happened. Sales reps? They're getting 30 minutes of deep CRM and email research compressed into about 2 minutes. Product managers are drafting entire PRDs straight from raw customer feedback. By handing off this high-volume, process-heavy work, teams are finally shifting away from endless repetitive execution, freeing them up for actual strategic judgment. Seriously, think about your own week. How much time would you get back if an AI just handled all your mundane updates?
And this is triggering a massive shift in power. For instance, an HR team at Jamf took this insanely complex performance review spreadsheet and spun it into an interactive, guided app in exactly 45 minutes. What's absolutely wild here is that non-technical workers are independently building these complex workflows that used to require massive software development cycles and expensive engineering teams. They're literally unblocking themselves.
Section 4. The enterprise SaaS pivot, the SaaS apocalypse. Now, as individual workers start automating all these tasks, legacy enterprise software vendors, the guys who built the tools we're automating, are being backed into an existential corner. Take SAP at their Sapphire 2026 event. They unveiled their autonomous enterprise, embedding over 200 highly specialized AI agents directly into their core business applications. We're talking agents orchestrating tasks across finance, HR, supply chains, the whole shebang. They aren't just selling software for human hands to click through anymore. They are selling the AI agents that will do the clicking for you.
The strategy here is really fascinating. SAP inked a massive partnership with Anthropic to make Claude their primary reasoning engine. Anthropic owns the underlying AI model, but SAP owns 53 years of business logic, complex regulatory compliance, and massive process moats. SAP is making a massive wager here. They're betting that owning the governance and the business logic is ultimately far more valuable and defensible than just building the base reasoning engine.
But why the sudden panic? Well, this pivot is purely about survival. Check this out. SAP's stock took a staggering 41% nosedive over a 6-month period. Why? Because the market started aggressively repricing the future value of human per-seat software licenses. Think about it. If AI agents are doing the heavy lifting, you need fewer humans. Fewer humans means fewer paid software seats. It's totally understandable why the financial press dramatically dubbed this the SaaSopolis.
Section 5. The global market shockwave, shifts in IT services.
And this violent market repricing didn't stop at software vendors. It is sending structural shockwaves straight through the global IT services sector, which obviously relies heavily on human capital. Indian IT service giants like Infosys, TCS, and Wipro saw immediate, harsh public market drawdowns. Their revenue models are deeply tied to billable knowledge labor, essentially humans doing repetitive tasks. So as investors started weighing the real risk of automated agents stepping in to flawlessly execute documentation, analytics, and compliance, they heavily discounted the future growth of these headcount-driven outsourcing models.
But this shift certainly didn't happen overnight. Years of cumulative capital buildup laid the foundation for today's agentic capabilities. We saw native AI funding in India peak at $754 million back in 2021. All that early, heavy investment in enterprise AI platforms and automation infrastructure permanently altered the landscape. It built the very foundation that's disrupting traditional billable knowledge labor today.
Because of this, we're seeing a massive strategic pivot. Rather than trying to compete in capital-intensive core model training, the future of global IT, especially in regions like India, relies on dominating application layer deployment. It's a fundamental transition from manual labor provisioning to actually overseeing, deploying, and governing these insanely complex enterprise AI integrations. Because at the end of the day, someone still has to build, monitor, and manage the agents.
Section 6. The hidden cost of agents, the pricing iceberg.
All right, finally, let's zoom in on the actual financial reality of deploying these autonomous agents at scale. Because like any major tech shift, there's a major hidden catch. I call it the pricing iceberg. You see, unlike traditional predictable SaaS subscriptions where you pay a flat fee for unlimited use, platforms like Claude Enterprise charge a flat entry fee, say $20 a month, but that fee often includes absolutely zero usage. It literally just gets you in the door. Every single prompt, every background workflow, every API ping the agent makes on your behalf, it's billed purely on token consumption.
And because these multi-step autonomous workflows consume a massive amount of tokens as they silently read spreadsheets, crawl the web, and draft documents in the background, your costs can scale extremely fast. The true cost of a highly active enterprise user often spirals right past that $20 base and lands somewhere in the $60 to $250+ range every single month. It's wildly ironic. The more productive the AI makes your team, the higher and more unpredictable your monthly bill becomes.
Which leaves us with one final thought to wrap up this explainer. As we officially wave goodbye to the era of predictable per-seat software billing and we enter the age of the autonomous enterprise, this is the absolute million-dollar question every business leader has to answer. Will the massive, undeniable organizational productivity gains of agentic AI ultimately outweigh the unpredictable and often totally chaotic financial realities of consumption-based billing? Thanks for tuning into The Explainer. I'll leave you to ponder that one.